Well, good day, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up for the end of November. It is the 30th of November, 2023, and it's tomorrow's the last trading day of the week. You know, it's interesting. I was watching today the release of the Cybertruck, which I thought was impressive. The market didn't. Stock was down $4. That's not so impressive. And the release, wow. So we'll see. The truck cost between $50,000 and $100,000 from the looks of it. That seems to be the price range that they're talking. It's cool. It's got a lot of interesting features. The towing capacity is unreal. 0 to 60 in a truck, 2.6 seconds. How do you beat that? I watched it race. Mr. Musk had a race between his truck on a racetrack and a Porsche 911. And the truck beat it. And then he showed that the truck was also pulling a 911.
Max Epstein.
Wow. I mean, that's just unbelievable. So gives you an idea of the capacity. Neat. It'll have extras. So the 96,000 is one way, but then they're going to charge $8,000. They have 9 wrappings you can do. You'd be better off doing it yourself. You probably get it for half the price that the organization's going to give you, and you're limited in what you can do. It's a different looking thing. You're going to get a lot of people for 6 months. You get one. They're going to want to stop and talk to you all the time. So be ready for that. As for the marketplace, you know, we've had one of the best Novembers on record. I mean, it's just been a son of a gun. I am so happy that I brought up to everybody here the seasonality of what the Dow, the S&P, and the NASDAQ would do. And I told you not to be in the Russell. I said, it's still the weakest. It's got nothing going for it. And I haven't changed my opinion. Eventually, the Russell will come alive. I don't have to be the first guy on the street. The street's littered with dead people that have been buying that for 5 months, 6 months. You don't believe me? Watch CNBC. Go back a month or so. Go back 2 months. Go back 3 months. Streets littered with these guys. Streets littered with people talking that we're going to 6.5% interest rates. That wasn't right. This has been probably one of the roughest prediction years that I have seen in my career. More people got things wrong than right of the people that I respect and the big names. But the one thing I refused to do, and I stopped doing it years ago, was at the end of the year writing my yearly predictions for what the next year would hold. It isn't worth the paper it's written on. You've got to take these markets for a trader a day at a time, but for your analysis a week at a time. Going beyond that into 3-month period, 6 months, out to a year, wonderful for your mental exercise. It's like doing a crossword puzzle. Maybe you'll get it right, maybe you won't. The market's too much of a random walk. Things change too fast. And it's not just any longer America. It's international, and there's so many different parts to the puzzle. Trade it on a regular basis and watch it. If you're an investor, you're doing it completely different. You're buying companies you like, and you're walking away from them. That doesn't mean you don't look at them every day. I know people do. They want to see how their stocks are doing, but that also doesn't mean you're adjusting your portfolio. Why did you buy them in the first place? Things of that nature. Which brings me to the point that, you know, we're ending our full course sale. Now, this is free. My courses are absolutely free on this. You can choose from the charting, the Bollinger Band, the outside day course. All it takes is subscribing to a 1-year subscription on anything that I've got at iraepstein.com under the word research. There'll be an icon that if you move up here, it's there as well. That'll take you where you're going. You can always call my staff. They'll work with you at 866-973-2077. You can pick the course. Please don't take the original charting course. You can choose it. Don't get me wrong. But don't take the course until I get the next new one finished, which I'm doing right now, because it's better. It'll be better than everything that's out there, in my opinion. Any I've done, and I've done these courses, I should count how many times I've done the course. I've been doing them and updating them since 1980s. So I've been doing this 40 years. So I probably do one every 7 years or so, is my guess. So I've done quite a few of them, and I constantly add. But what I separated were the Bollinger Band course and outside day. They're not included. And I just touch on the Bollinger Bands in the full course and the outside days because I want you to get those separate courses, a lot of chapters to them, and it's really important you understand them. It's a whole different type of thing. It's a course within the course. That's the way to look at it. All right. So you can get a future subscription only, morning video and or the full subscription. Spider morning video. I come out at 9 o'clock each morning, cover 40 charts for you. We rip through everything, try to give you a lot of stuff that makes sense. I think you'll love it. And I rotate stocks all the time. I've been covering Zoom this week, and then I'll find another one that I start covering over the weekend. I'm always moving around looking for something new to do. I answer private questions, so I take a certain amount of time each day. You can write me. I create a short video for you, and people will ask, what do you think of this? And I get right back. Right back could be, you might write me in the morning, it'll be the afternoon, it might be right away. It depends what my time allocation is at that point. So it's pretty simple to do this. Most of our courses run about $160. Most of the subscriptions. We have the full research, that's more. If you have an account with us, it's about $400. So this is a great way to go. And if you are a subscriber, as long as you go up in your subscription, you cannot move from futures to Spider. I won't allow that. They're priced within just dollars of each other. But you can go to the combo, you can add the full research, different ways you can go. Okay, you can always call my staff and ask. So, let's take a look at what we've got today because it is important. And when we look at it, you have to understand, you've now completed this leg of the seasonals. Seasonals did not end today. They start ending over the weekend on the S&P and then the other two roll-ups of the NASDAQ and the Dow. They don't have to go to the end straight up. You could be ending already, and you got to pay attention to that. In Zoom, what the market did is it fit back in, filled a small gap left in the chart. You can see that right there. The swing line is still bullish, higher lows, higher highs. That part's being made. You have a market, and this is, I think, even more important. Maybe we should come back a day here. I do want to do that. You had a big outside day right here down. You closed lower. Once you took that out, you notice that you moved. I teach how you work with that in the outside day. And what you moved into was what I teach in moving averages. This is a big resistance area. You've heard me say it each day that I've been covering it. And you add to that the Bollinger Band. And yeah, I think the pros are taking money off the table right there. Are we embedded? To embed, you have to have these two numbers go sideways as 80 or plus for at least 3 days in a row. So you got Thursday, you certainly had Wednesday, you didn't have Monday, Tuesday. So you need Friday to do that. We'll see if it does or doesn't, but that's another reason it's overbought into that. I felt good with that. In Rivian, by the way, the Tesla truck beat the Rivian. They did a race with that in a tow pool. It beat everything that it was on. But this is very sideways. Do you remember yesterday what I said when you came up here? I don't know that it's going to fall back like this today. I'm guessing it will, because 95% of the time you stay within the bands, and this is what you call either building a base or a top. I went through that yesterday. I won't do it again today. Neutral is the 18-day average, just about where you're at now. In UGA, it was the same thing. Yesterday you went up here. And what did Ira say? Who is that guy, Ira? Can I get this to do anything? It doesn't seem to want to let me come back a day. I'm going to see if it will. Oh, whatever. Ah, there it is. That's what I wanted it to do. This is where you were yesterday, Wednesday. And as it's there, I'm going, I don't think it's going to have legs. I'd be very, very careful. Plus, you have OPEC today. And I said in my different videos, I said, got to treat this OPEC meeting like a huge FOMC meeting. It appears that the Saudis are losing control of what other members want to do, and it's not unified any longer. You tell me you didn't have a lot of crazy action today. I call that pretty crazy. As soon as the meeting ended and they said, well, voluntary cuts, that's all I had to hear. Voluntary cuts. That is the same as saying, Are you going to do this, John? Are you going to do that, Mary? Of course you are. You're going to be on that treadmill every day this week? Of course you are. Need I tell you any more? Angola, 2 hours later, no, we're not. We don't agree. We're not going to be cutting anything. Others will do the same, but it's great to lie at first. It's like when the oil people go into the President Biden's office. Yes, Mr. President. Yes, Mr. President, as they walk out. You think we're going to do that? Was he crazy? That's basically what goes on. In XLF, you have a market that's running to the upside, still embedded. I still like it. Now, the financial services have been a big surprise to me. They have really come alive, as has KRE when you look at some of the regional banks. I like these. These are interesting plays. In XLI, as I'm looking at the market slip back here, I can see big support, 104.84, 104.36. It's embedded. I think the industrial sector surprised people. It has come alive from the depths of HELL and come all the way up from 95 to 107. That's a 10% rally plus. That's impressive, but you're a little long in the tooth right here. So be a bit cautious is my word. Why am I saying that? Let me think about it. End of the month, what are we going to get next week? Jobs report. Oh, more CPI data. Just be ready. It is December, though. So traders will take this with a grain of salt, and you know what else we're going to get, right? We're going to get the FOMC meeting in 2 weeks. So you got time. As long as you're embedded in AMC, there's still downside is the way to be looking. It's not trending. You have the swing line up. You have prices under the 18-day average. And I happen to think that the $7 area is probably where it's trying to bottom out. This is a stock that is, remember, it's down here after a 10-for-1 split. So the people that have been buying this and saying it's going to be great, they're in trouble. But there will be a number. And maybe it's the Beyonce rally that we'll see this time because her movie's coming out. We saw Taylor Swift did. And, you know, you will get some holiday play. Disney has done a terrible job so far with their holiday movies. The current one they just released flopped, and there's nothing worse than a flop. In the consumer discretion, I would not have my clients buy into a 200 and 100-day average on the first go-round. You generally come away from that bruised. Could it get over and stay over it? It certainly could. Do I think it will right now? I don't. Does it matter what I think? Not really. I'll pay attention to the rules that I develop. Then in the home builders, I still like them. And it's just been a hard move, but why wouldn't you? Interest rates are coming down. Do you know where mortgages were today for a 30-day? 30-year, I wish a 30-day. 30-year, 7.22. So this was just over 8%. So you've dropped 3/4 of a point. It's not going to move you if you got a 3.5%, 4% mortgage, right? But as a first-time buyer, you're watching. We're not getting a lot of refinancing just yet because traders are saying, each day that goes by, these rates are falling. I'm going to wait. And that's not the way to do it, unfortunately. In the energy sector, again, I'm going to repeat, we don't know what this OPEC thing really is. Probably we'll hear more tonight overnight when we're sleeping because they do this out of Dubai and all these crazy areas that we sleep when they're getting to work. In gold, I still like gold. I think gold is saying that, hey, interest rates are falling. Yeah, we can get where they pause a while, but they're basically falling. Inflation is falling, but it's getting into the very hard to do number. And even the most aggressive traders that are talking inflation coming down to the Fed target, the best ones I see are still in the year 2025. That's a clear sale for the gold market I think if you come in on breaks. It's very hard to buy this particular rally when you just went up in the neighborhood of $10. Let it pull back a little bit if you're not involved. Silver's stronger than gold right now. It's got industry going for it. It's got the idea that the gold isn't there quite this way. And people have always loving this cheap metal. They think, hey, it's a better buy because I don't have to spend $2,000 an ounce. I'm spending 20-something an ounce. That's the thinking. In copper, I don't have an opinion. I still don't trust what China's trying to do or not do. I don't know what they're up to, but you need them in order for copper to come alive. Then in TLT, I told traders to come out. After this big rally, I was telling you, I said, you're at the 100-day average. You're at the upper Bollinger Band. I'm not bearish, but you're hitting all the resistance numbers. And I realize you think it's going to the moon. I don't. And we'll see what happens. On a correction, yeah, I think you have to take a hard look at being long. And as long as you keep the embedded reading, I think on pullbacks, that makes sense. In the dollar, this is the first bounce away from the first challenge of the Bollinger Band and the 100-day average. You only stayed under it 2 days. So you're getting your bounce, and that's what I teach, and you hear me say it to you. Now, when you reopen, if you lose the embedded reading with the closing over 21, you might be headed back to wherever the 18-day average is in red. That wouldn't surprise me. If the dollar's falling, FXE, if the dollar's going up, the FXE, let me take that back, is likely to fall. It's already, if you look at it, flirting with losing the reading. It'll lose it on the opener. It would have to be up dramatically higher not to. And that puts in this as the downside target as I see it on the chart. But if you take my charting courses, you learn this. I just reiterate what I teach, and now here's the beauty of my full charting course right now. Now I'm able to put in everything I've learned over the past 7 or 8 years between the side courses, the outside day, the enhanced Bollinger Band, and the new charting course. It's all I know. Doesn't mean that it's right, but it's all I know. How do you take advantage? You move your cursor up here. That'll take you to the area. You can go to our website at iraepstein.com under research. Just buy the regular price. We know that you're buying on the cyber sale. We will make certain that you get everything you have to, and you can call my staff if you need at 866-973-2077. They'll work with you. I'm Ira. You have yourselves a great evening. I'll see you tomorrow. I'm looking forward to the weekend for a change. Take care.